Good afternoon, everyone. Welcome to this panel discussion, Mastering Client AUM, Flow and Revenue, for the purpose of creating excellent analytics and MI use cases across the enterprise. My name is Greg Glass. I'm Head of Revenue at AVIC, and with me today are three pioneers in the world of client AUM and Flow, data management and analytics. On my right, George Bliss from AllianceBernstein. Further to the right, Terry O'Dakin, First Sentier Investors, and joining us remotely, don't know if you can put them on screen for a moment, Will. Carl Sal's joining us from PIMCO in Austin, Texas. What we want to talk about, first of all, I'm going to just start with, let's just, these words, client AUM and flow, it's like oxygen and water to the asset management industry. Why are we talking about this today? I'm going to ask George just to give us a definition of terms, what it is, what it isn't. Then I'm going to ask Carl to talk a little bit about what are the solution components for building this capability, and then to Terry to say, well, who is it for? Is it just for international global asset managers that have got so much money that they can spend building really state-of-the-art systems, or is it for smaller asset managers as well? What are the criteria? Who's it for? So George, if you could kick off.
Thank you. Good afternoon, everyone. Mastering is key for me. That's the key word, really, and it's a technologist word, I suppose. That's got certain meaning to technologists. If I sort of play that back to my business partners and my sponsors, when I'm talking about this domain, it's about a golden copy, so a single version of the truth, really, of that economic book of record, really. So AUM, flow, and revenue, more, kind of looking at revenue in a little bit more detail these days. I think what it is timely. What it isn't is working day plus 1 month plus 2 months. So I think the relevance. You don't want data that's in the rearview mirror. You want something that's a little bit relevant, recent, that you can act on. I think it needs to be distribution friendly and finance sanctioned. So the single dollar that both businesses, both organisations would recognise. And what it's not, I think I would say tactical solutions. Single channels where you have to join up. Where you have salespeople looking at multiple sources of data to get a single answer. Where, as I said, where it's not a trusted number across the organisation. Mm-hmm. Where the data doesn't reconcile properly every month. You're having to sort of explain why, or try and explain the differences month over month. So I guess kind of tackling some of those topics, really.
Yeah, thanks, George. And anything about client, so that's different from FUM, the client AUM view around what level of client are we matching against across the firm? Is that finance's view of client, or is it distribution's view? What does that look like, and why is that hard?
It's a really tricky one, isn't it? Because who's the client is, spend an awful lot of time talking about that in my business, but it's got to be a distribution-friendly version of the client. I think it's got to be a sales relationship, an influencer relationship, or a decision-maker relationship. Typically in finance, obviously, that's more of a legal entity maybe that you're contracting with. I think it needs to be both things.
Yeah. Great point. And I think one of in our work with clients that is very much looking at the investor ecosystem, and some of the more valuable sort of insights and analytics are around parties that have influence over flows rather than necessarily being the contracted entity, for the AUM and flow. We'll talk about that a little bit as we go along. Thanks, George. Carl, just want to talk about, what are the components of a client AUM and flow solution, from your experience at PIMCO and Janus and all the other places you've been? And we've got a picture that we'll put up just for the people in the room here to see as we go, but we'll flick back from you as you're talking as well.
Thanks, Greg. So agreed with the definitions here so far. Ultimately, what in my experience, it has been around having disparate rogue IT that business groups have decided to create on their own in order to try to explain the efforts that they're influencing, or the dollars and currency that they're influencing, into the funds. And what that often leads to is C-suite managers coming in with different numbers. And so what's the trusted number, or what's the golden source is exactly the right cause or catalyst for why this mastering strategy has to come into play for some of the asset managers. So I think about the governance and then the foundational building blocks. This foundations is key to any of our organizations, but then you also need to bring together, well, what is that client? What is the golden copy or source? What are these crazy spreadsheets that we receive from the various platforms, and how do we make a little bit of lemonade out of the lemons that we're given in the data quality that may or may not exist in some of these different transparency files? So we think about the data sources on top of those foundations, and making sure that we master those different domains. And then, of course, the way that those are published out so that we can be enabling business management, our client-facing teams, frankly, the sales folks who are right there with the clients globally. And we've embarked on that a couple times. I've done this multiple times at different firms, and ultimately, trying to get the best information out on where those influencers are. Everybody has a different version of what client means when you talk to the different groups in distribution. And so what they are contributing and how we measure that is the ultimate goal.
Thanks, Carl. Terry, we just turned to, so we've talked about client AUM and flow. These definitions are really important when you're working with data. Talked about at a very high level, sort of the what does it look like in the enterprise? What are the components of the solution? Who's it for? I mean, who doesn't need this, and who does need it, and at what point in the journey? Is it size of AUM, or is it the characteristics of their business where this really becomes, a material, a sophisticated solution becomes important?
Thanks, Greg, and good afternoon, everybody. Look, it's definitely for a large global asset manager, particularly one that's operating across multiple asset classes in multiple jurisdictions across multiple channels and segments. For such a manager, it's absolutely critical to be able to understand who your clients are, what AUM, what flow, and what revenue is attributable to those clients for a whole host of use cases across the business. It's probably not for a very small boutique who is maybe operating one or two strategies in a single jurisdiction across a single channel, because by definition they'll really understand who their clients are. But what about the folk in the middle? And I think in my mind, some of the characteristics where this does become quite a significant issue and a concern is the minute you're kind of operating across one or at least two jurisdictions, which probably means you've got more than one fund range, which means you've probably got more than one, you're operating across more than one channel, and particularly the minute you start to get into more of the wholesale space, where the challenge of omnibus and platform and large distributors becomes increasingly difficult for an organisation to manage. Those are some of the kind of the key criteria I would suggest one would operate. It's not a really AUM driven thing, but clearly, the more AUM you've got, then probably the more kind of I guess revenue you've got to develop something like this against. Brilliant,
thanks, Terry. So we just want to talk a little bit about the drivers in the market that have made this a hot topic. Obviously, understanding your firm's AUM and flow and revenue's always been important, but in our conversations with clients today, managers tell me they feel like they're caught in a data vice, right? They've got the volume of data increasing all the time, the number of sources, the actual data that's being received, and it's also quite volatile. So on the supply side, there are more and more things to deal with. On the other side, on the demand side, there are more and more consumers of the data that are appearing who want, more granularity. They want data to be delivered faster with more precision and reconciling. And just wanted to spend a few moments just talking about sort of what are the trends in the industry, right now that are sort of driving the demand for this. And I thought, Terry, maybe you, from what you see at FSI, what's driven the investment in the capability?
Yeah, so I think as our industry has progressed over the last number of years, the whole industry, particularly active management, is under increasing pressure, margin pressure from passives, a large amount of kind of consolidation, both in terms of asset managers, but also in terms of distributors and partners. So on the flip side, there's a lot of consolidation too there, and this need to differentiate, and particularly I'm not talking about investment process and investment performance differentiation. Of course, that's a given. That remains fundamentally important, but it's differentiating across how we see our customers, how we see clients, and the need to service those clients in the most the most appropriate way, and really kind of that's one of the key drivers around differentiation. And how can we hope to effectively service our clients if we don't actually understand who they are? And so the minute you start to ask yourself those questions, this becomes a kind of a fundamental piece, and not just in terms of sales enablement and sales retention, but the strategic use cases for it, to really understand your book of business, to be able to overlay competitor intelligence against that book of business, enables you to make smart decisions about where you're going to push your resources to, make smart decisions about which products you are and aren't going to develop, and which products you're going to keep, which products you're going to shut down ultimately. And then obviously important to understand the revenue picture from a financial planning perspective. So all of these things have kind of come together to make this a really hot topic at the moment.
Thanks,
Yeah.
Terry.
And I was just going to say, I mean, I don't know whether anyone would disagree with me. I just think our industry is really, really lagging behind. Data literacy is bad. We're sort of hooked on really bad data and spreadsheets. We run our businesses on spreadsheets, and I think we need to have pure data. When you can, when scrubbed data, timely data, as we talked about earlier, that really can facilitate quite a lot of agility for distribution leaders and sales managers. I mean, going back to the drivers a little bit. I mean, platform power, the rise of platforms. In the UK, we're sort of well versed in consuming platform MI. Again, I think it's been very spreadsheet based so far. Doing that a little bit more systematically is sort of the driver. But platforms. I think Platform report 10 years ago, sort of 35% of gross sales were platform, executed through platforms. I think it's now 65-70%, something like that. And in certain businesses and certain channels, that's higher. So I think that's what's driving a push on data literacy. There's a new breed of sales manager coming through that's just hungry for data, and they want to be a bit more systematic about how they go to market, and just we're being forced down this route just to get visibility into who our clients are because of the way they're trading.
Great. I just pick up on that demographic change. We see across our client base, you see a change in, say, the distribution leadership. Somebody comes in who's a true believer in data and data-enabled sales, and then you see the investment and you see a complete change in the whole sales organisation, distribution organisation. I guess you've seen that at FSI, Terry. I know Alliance Bernstein's going through something with a McKinsey veteran who's come in to run the distribution function, who just lives and breathes data. Right? Yeah,
and very much. I think we've been talking about digital wholesaling, digital distribution for a long time. He's Ona, our new head of distribution, is really pushing on that. Setting up dedicated business units to sort of to kind of exploit that. I mean, that takes quite a bit of bravery, I think. It's quite transformative. And if the data's not there, then that's sort of off to a. In the US retail market, where we're sort of piloting some of this stuff, it's a very mature data market, and we're lagging behind in Europe. But I think we see the model and we want to adopt it. So, yeah.
Great, good thoughts there. Carl, I just wanted to pick up. You've had a really interesting career across, Janus, PIMCO, Invesco. Even your time at Charles Schwab is relevant. you've seen this omnibus problem, and I just wanted you explain it very well. I just would like for you just to spend a couple of minutes just talking about how the asset management industry became so data dependent, and what the source of that problem was.
Thanks. I think picking up from what Terry and George were just describing, the new culture that we have of that data decision making is really driving the current state. But if you rewind back to when regulation started this process of basically federating out all of the different distribution paths by which an investor can connect to a product, I think about the shareholder accounting, right, where each asset manager literally had an account on their books, and the broker or the clearing and custody platform had the same account. And it was shadow accounting, just like we all know that's done for some of the larger separate accounts. And so what's happened is this meeting of the minds in tech and ops in order to continue to squeeze, the streamline and the reduce operational expense and simplify. The omnibus concept came to light where one account now exists on the shareholder register, and that account is simply a pool of anywhere from 2 to tens of thousands of actual clients, and you don't know who's in there. And there are many banks that control those omnibus accounts, and so you see the total, so that way the portfolio management and your total fund flows are still known, but what you don't see is all that client activity. So when I think about a phone call from a portfolio manager who says, "Hey, I want to call somebody at Pershing and thank them for this large trade," right? I immediately know that we're talking about the wrong data. And right there, we know Pershing is a platform. It's a global platform in the U.S. It's owned by the Bank of New York, and has a significant amount of influence in our industry. But the omnibus problem has been solved primarily by providing us feeds that we are then able to identify the clients that are using it. It's not perfect, which is a little frustrating in some cases, but it has been somewhat of a journey where in the States, it at least has become significantly more streamlined. A group of us got together over a decade ago to pull together the industry problem across the brokerage firms, the asset managers, and the banks, and actually created, actual feeds and automation that comes through a single clearinghouse known as the NSCC, which is DTC for those of you who might know. But in my interactions with some of my European colleagues, and when we look after the Europe data, and especially the Asia data, we do not have similar standards. And so that has led to, again, different levels of quality of this transparency in order to be able to understand the look-through that is required for those omnibus accounts to really know your client.
There's a good opportunity for platforms here, isn't it, to monetize as another revenue stream, monetizing that data. So the manufacturer has to pick up the tab there, but that's. What are you seeing in the US model? I mean, I know in Europe, all funds, particularly, has sort of been one of the leaders there in sort of building out quite a sophisticated platform and some data feeds, Clearstream, various other big players. I mean, how are the US sort of broker dealers and wirehouses monetizing this data now?
Yeah, so what we've seen over the last probably 3 years has been a monetization, especially as their margins are squeezed in other areas and M&A continues. What they're offering now is additional profile points about the clients that are using the products that we have on their platform. And what that looks like is more spreadsheets, right? But what they're doing in the feeds and the industry standards is they're cutting down, or they're doing the very bare minimum that they have to, in most cases per the regulator, and then they're selling us data, or attempting to sell us in some cases, data that's actually then either specific to those clients or profile about that overall platform. So you start to get rich analytics, and you start to get other information that influencers and especially distribution heads think, find a lot of value in. The problem is you've got yet more spreadsheets. And that's led to, I think we're now looking at over 300 or 400 different sources of information that come through that just describe clients and the platforms that they're using.
Yeah, that's quite a striking number. So anywhere we see clients, typically it's 100 data sources, but anywhere up to 300-400 for the larger managers, just to describe firm-wide AUM with a client lens on it, which is a phenomenal amount of data processing to be doing on a daily, weekly, monthly basis, and starting again, within that cycle. So I'm conscious we've depressed everybody by just talking about the problems that we're beset with, by the industry. I'd like to talk a bit more about the benefits around once you put this capability in place. Right, we've defined what it is. We talked briefly what it looks like on the ground in terms of boxes and buildings and a solution architecture. But I'd like to just go around the panel now and just say, if you make this investment, then what? What benefits have you realised in your firms? So let's do it. Let's start with George,
yeah, sure.
Terry, then go to Carl.
And Terry touched on some of these points, but I think we're trying really making a very concerted effort to focus. So bringing the right products to market, looking for white space, looking where we've got opportunities where we're underperforming in certain business sales, where we've got a great opportunity, we've got a good performance, a good product, good price, and a captive audience. So there's space for us in the market. So just trying to identify those those segments. I think that anything that kind of pushes us forward down on that journey.
So that's client segment. Then you're looking at the total spend by that segment.
Yep.
Yeah, and then your share within
just
that segment.
Benchmarking our business against the market, and then but then kind of working out how we go and play, how we address the market. I just think the hygiene factor is sort of very obvious, but having illuminating some of these omnibus accounts and knowing who is trading is comforting. It helps you to mitigate risk or take some action, reallocate. We've had some good examples of where we've managed to retain assets that we would have otherwise lost because we've been able to suggest some reallocation options and things like that where we have concentration risk. So
that's an early warning signal the transparency, the look through to the sub-register to see, okay, that's the decision maker.
Right.
We've got to get sales to talk to them. So sales enablement, distribution planning, distribution strategy. Thanks, George. Will, can we put the use cases on the slide? We've got a summary of kind of we've tracked about 160 use cases across the firm that require enterprise client AUM and flow and revenue data. You can see a number of them are concentrated in sales and business development, but also client services and quite a few in finance as well. We're seeing a lot of demand from our clients in the finance function who will also want to use the same single source that's coming into the building that distribution have asked for all the reasons that George has just explained. And finance are under a lot of regulatory reporting pressure, and also a lot of the FP&A function is also looking to provide a lot more support to their business partners in terms of what's going on, what's happened and what might happen in the future, and sort of controlling the business against budget and targets. Terry, what are your favourite benefits and use cases from this data?
I guess, look, I'm quite lucky in my role because I wear a number of different hats, and so first and foremost, it's about providing high quality, detailed, granular information to our salespeople that enable them to be effective in their roles, whether that's raising new assets or client servicing or retention, right? And there's kind of a base level of information that you need to be able to surface to your salespeople, your client-facing people, in order for them to be effective. At the same time, and this is to your points, George, distribution management is kind of face decisions all the time about how they allocate resources. And for example, do I open an office or branch in Switzerland or Spain or Italy? And if you don't have an understanding of your own book of business, your own strengths and weaknesses and how that overlays to the market, and you kind of can't get the market intelligence, if you aren't able to provide a granular view of your own book, right? Not without spending quite a lot of money. You spend money anyway, but to do that on an ad hoc basis is incredibly costly and not very effective because it's quite out of date always. And similarly, when you're thinking about product development, again, it's about which funds do I launch, which investment strategies do I commercialize. Again, you've got to understand your book of business and the market dynamics to really kind of be effective in making those decisions. The same could be said with M&A, for example. Which investment capabilities am I going to go and try and acquire? All of these things are driven fundamentally by being able to first and foremost understand at a very deep and granular way your own book of business. And I think that's the beauty of something like this, and that is there are so many multiple use cases for it across the entire enterprise. And it becomes quite fascinating, and you just need to get started. And if you build it, they will come, as the movie says. But there you go.
Right. Thanks, George.
We've talked. I mean, there's no question. There's day-to-day uses, but by sales managers, finance, kind of. As you said, sort of explaining the top of that P&L, kind of what's going into gross revenue. But I was just going to say, what I've observed in a couple of projects, these sorts of projects, is sort of the cultural change, the behavioural change in the business that comes from having this kind of level of data. So you move from maybe less of a salespeople very anxious and about sales attribution, and more of a kind of client-centric sort of model. So where you compensate and you incentivize your distribution teams a little bit differently. But that's sort of a we mentioned like the new breed, the sort of the tech savvy, data driven distribution function. I think that's sort of that helps to kind of further that cultural shift, I think.
Sorry, it should be remiss of us not to mention there's a regulatory angle to this too. And so those of you that are running Irish or Luxembourg funds, and this is coming, all the signals are there from a UK perspective too. Distribution oversight is really kind of right at the forefront in the kind of crosshairs of the regulator. And underpinning that, again, when you're thinking about patterns of distribution, you've got to be able to drill down and understand the granular details. All of this stuff is critically important.
Great, thanks, Terry. Carl, I'm going to turn to you. I'm just going to just make a comment. We had a client who ran a A/B test, not Alliance Bernstein, in a statistical terms, and they gave half of the sales force all the data and the data tools, and they left the other half of the sales teams sort of, they called them there was the D team for data and then the B team. So there was an element of self-selection. So the data refuseniks were generally grouped into the team that were deprived of data. But the difference in revenue per salesperson and revenue per client after the test, which is still running, was 12%. So that was the number, i.e. the uplift of data. So same sales teams in the same market, across the same client base, split them up, enable one group with this kind of data that we're talking about. Now again, there's a real bias there because they're the people who also want to use the data, right? So, but this is the first kind of hard, data that I've heard of where people have actually tracked the value add of using more data in sales enablement, for example. Carl, anything from your point of view around benefits of this investment?
I think that's a great study that you just mentioned, and it actually aligns perfectly with what George was saying on the transformation. So, the business plan that distribution heads put in place, they have to be measured at some point and at some level of granularity. And when anomalies occur that were maybe not expected, both good and bad, they need the data at the right level to explain that anomaly that's occurred in the measurement of that KPI. So these are some great use cases in terms of KPI, both from a finance and distribution perspective. Without the data, though, to Terry's point, these use cases don't go far, right? Top level measurement we know is not sufficient, maybe except for maybe for portfolio management. But when it comes to our distribution measurement, that business plan measure is increasingly important to be able to not just have cultural transformation, but thinking about all the actual client-centric view. So these use cases are, again, thoughtful and I think very relevant. Each of us might select different use cases on how we want to measure that distribution effort or that business plan. At the same time, without an ongoing global strategy about where you're investing in acquiring, standardizing, governing, and continuing to maintain that data, and continuing to build that rich set of data is very important. Maybe I'll just mention one thing we have found is doing the same type of assessment about market share, which country should we go into, has been a big change for PIMCO over the last few years. And some of the markets that we've moved into, we've been able to pull together some of this transparency. It has been a little bit more challenging than maybe in some of the more mature markets like we see in the Americas. However, when it comes to building out these KPIs and measurement, it's fundamental to be able to prove out the business value or the business plan that was put in place when we go into a specific, and especially take on retail distribution in a specific country. That's how we're trying to approach it. So we're not tackling everything. I think Terry said, start somewhere and start small, and then they'll build it, they will come. That's exactly how it's worked throughout my experience, and focusing on a specific business plan that you can then acquire, standardize, and continuously maintain that data so those insights can be made available. That seems to be working because we continue to build out other places throughout the globe.
Thanks, Carl. Okay, so we've talked about the capability, we've talked about the benefits. I want to talk a little bit about how to build this capability and the kind of problems that get encountered and how to be successful. Just before I do that, Will, if we can just go to the cover page, and just want to highlight there's an opportunity to submit questions here. There's a QR code that I'm told you can scan even from the back of the room, but equally if you go to slido.com on your phones and enter the code, you don't need the hash code, but that 7-digit number 1120385, and you can submit some questions and I'll pass them through to the panellists as we go. We also have a mic in the room that we can pass around, so we've got 15 minutes left. We're going to talk now about how to build that capability. We'll sort of wrap up at the end with some concluding remarks, but then there'll be an opportunity if you want to ask questions of the panellists on anything we've discussed today. But equally, if you feed them in via that Slido reference, we'll sort of weave them into the discussion as well. Thanks. Okay, so topic now is, so what are the elephant traps in getting this done? If you think about the journey that all three of you have been on at your various firms, let's see if we can say what can go wrong. What are the hard parts of building this capability? Because I think if it were easy, every asset manager in the world would have these fantastic capabilities, and we wouldn't be here talking about it. So let's maybe start with you, Carl, if that's okay.
Absolutely. So as I think about that and reflect, probably the vendor selection is one of the more important pieces of the building blocks. So you may start with your own internal solutioning, which is great. At some point, there's a tipping point where you realize that the marketplace has suppliers and other third parties who can help you along this journey. We have various partners, and we've evolved. I've used pretty much everybody at this point, I feel like, throughout the globe. And most have continuing to develop, and they are also undergoing some of their own M&A activity. But the call out that I suggest is making sure that the foundation is there. So information security, those types of important building blocks to any tech and ops foundation. Making sure your third parties are the right partners. And then the last part that I would highlight is making sure that there's a continual awareness of where the problems are, the quality gaps, if you will, the black holes that are going to continue to make people distrust the data. There will always be an omnibus amount that we can't break down, and that's going to be how that works. But making sure that education is out there so that people have, if you will, a normalized understanding of where transparency is helping them, and then where there's just not enough information to be able to break that down. That continued education or communication forward.
Thanks, Carl. Lots of valuable, hard-won practitioner insights there. So I heard vendor selection, the importance of InfoSec, capability, building trust in the data. And actually, I've just got a question through on how do you build trust in data. We'll talk about that in a minute. But let's George, and then Terry, if you want to just build on that list.
Yeah, I mean, to that last point, Carl, I was, what came to mind for me is what is good enough. So, you're ingesting all this data to help you look through these large omnibus accounts. How much of that do you need to, where's the sweet spot, the balance between sort of cost and reward? I'm sure every manager, working with fledgling platforms and things like that, maybe it doesn't make sense to bring that data in. I guess my sort of experience there is that, obviously you prioritize your largest platforms, your largest clients, you focus your matching on your target markets. But the really long tail of clients that you need to sort of identify across, all of the data that you're bringing in, the collective picture of the little pockets of assets that sit in across the breadth of platforms that we're working with. It only really, it comes to life when you've sort of not done 100% of your matches, but I guess you need to be very clear on what is good enough. When you switch from project mode and doing all this matching and this hard labour into sort of starting to sweat the data asset that you've built. So I think a lot of consideration and thoughtfulness up front about where that sweet spot is, I would say. That's,
And just a clarification on when we talk about matching, we're talking about this, fundamental industry challenge, which is matching account data on the TA or on the platform data to the, the client record as the enterprise would recognise it, an organisation in a building with decision makers sitting in that building. Classically, the CRM organisation in your CRM, but it might also be in an enterprise client master. So that data matching challenge that every asset manager is having to deal with and maintain. Yeah. So added to the list there, Terry.
Yeah. So I guess I would say three things. One is, don't underestimate the complexity of this. Right? It is quite complicated, and it's not just about organising the platform data with your TA data. There are other elements to it, like you've got to have something to match against, right? And so there's a client master component to this too, right? And so you've got to really kind of understand the full stack of masters that you need to make something like this effective. The second thing that I would say is decide up front what you are and aren't going to do as an organisation, and kind of by that I mean there's a kind of a whole spectrum of services that you can partner with somebody on in this space, from full end to end, including analytics, to the data organisation, the data processing, and then you do the analytics yourself, which is how we operate, and that's really important that you get that nailed up front, because it can be quite distracting down the line if you don't and you haven't worked that out 100%. And the last thing I will say is don't underestimate the organizational transformation change component to this, and this is kind of true for just about any type of kind of implementation. You can't just do something and then hand it over and expect it to just kind of operate seamlessly in the business. And to the trust point, that's the key for me, Greg. It's really, really making sure that you're working with the business partners, the consumers of this information through this process. Understand up front that it's going to be a process. It's not going to happen overnight. And get them involved in things like testing, in use case design, etc.
Great, thank you. So we've talked a lot about data and architecture, and I think this people and culture and the change component really needs some attention. We've sort of got under 10 minutes left here, but there's a question that's come through on the panel, and for those of you, thanks, who are putting questions in via Slido, the tab to click on is the audience Q&A. But so question, let's say, or pass this to you, Terry, right? Because you just mentioned the people. How many managers have dealt with poor AUM flow and revenue data for years? So how do you build trust in that data, in the business, when they've sort of been going, well, look, the data must be right because we've been using it for years. Now you're bringing in some new data that's different. So is it correct or is it wrong because it's different? Like, what are some of the practical sort of issues that you've had to deal with, and how have you dealt with them?
I think first and foremost, it's agreeing that there's a problem to solve, right?
Mm.
And so right up front, I think if you aren't able to be able to confidently and accurately represent your client AUM, and I'm not talking about Hargreaves is a bad example, but I'm like take Fidelity Funds Network for example. If you aren't able to identify the different advisors, for example, the different parts of the Fidelity business that are trading through that one omnibus account, then you can't, you aren't really able to identify your client's AUM flow and revenue associated. That's just an example. And so if you can agree that there's a problem to solve up front and that there's use in having that degree of information, then I think that's your fundamental starting point. And then it's just a reconciliation. If you'll reconcile back to that omnibus account, there'll always be something that you can't match. But as long as you can describe what that is, and everybody agrees, well, we don't know who that client is, that's okay, particularly when you're matching at 80 or 90+%. And it is a journey. It's a journey that you need to go on. Likewise, when you start to turn your attention to non-sales related use cases like the finance use cases, it's making sure that we understand there's a difference between how a distribution team might view a client and how a finance area would view a client. And that difference could be as simple as a contracting entity difference, for example. It might be more complicated around transfer pricing differences, for example. But it's around calling those things out up front and laying down the business logic that enables folk to go through that journey and trust the data as you're kind of iterating and developing out and fulfilling the various use cases.
Thanks, Terry. Okay, we've got a few minutes left. I'm going to do two things. I'm just going to do some quick fire sort of numbers type questions. So, for example, we estimate that the sort of messy data problem is costing managers $1 billion a year in avoidable costs, right? There's a cost that has to be borne, which is just managing the data, as any industry would. But there's $1 billion that's being spent that doesn't need to be spent every year. Of that, there's 100 million spent wrangling this AUM and flow data across the top 400 managers. So let's have a look. If we just think about, how much does it cost to put in this kind of capability? Do you think, do you have a view? I mean, how do you think about it, George?
Yeah, it's a punchy number. I've got a rule of thumb, which is that, to put $1 million worth of platform look through that you trust in front of a sales manager costs something around about $30 to $35.
Is that per year or
per year?
Per year. Okay, so it's
forever
for life.
For life.
Yeah.
It is punchy, and obviously when the platform, the rise of platform power, you've got to pay for the platform data. You've got to wrestle this data into shape. But I think if you look at the total cost of ownership, that's probably not far off. And then you have to ask the question: is that sort of value for money? And I would argue it is. I think if you look at some of the what new money do you need to bring in to sort of pay for that? It's relatively small, kind of new assets that this needs to sort of to sing for its supper. It needs to bring in, a typical asset manager like Alliance Bernstein. We need to bring in maybe sort of $100 million worth of new assets to pay for this sort of capability a year. Something along those lines.
Yeah, I think these are really helpful sort of metrics to think about. So 100 million of new assets, which is non-trivial to pay for a capability that you could use across the firm. Question on platforms. So 30 to 40 platforms in the UK, 5 years forward. Terry, how many platforms will we be dealing with? Fewer or a lot more?
I think in aggregate the answer is going to be fewer, Greg, and I think we've seen a lot of that taking place, particularly in Europe already. It's a huge amount of consolidation taking place. You mentioned Allfunds earlier on, Clearstream UBS, another example, MFX, Euroclear, Fundsettle, another example. So a lot of consolidation, and I think the other piece to note is that I don't think that we should underestimate some of the challenges out there to the status quo, and that we might see some new entrants doing some interesting things, right? Which might mean that we're we're having to deal with a whole, different kind of mindset around digital, and I think there will be fewer, but we might be dealing with some different players.
So on the supply side, quite a dynamic environment, the data landscape changing, the existing players bringing out new data services, consolidation. I think consolidation, big theme, right from asset managers to vendors. There's too many vendors supplying asset managers at the moment. They're being rationalised. The platforms are consolidating. It's a big trend. Dying minutes. I'm going to ask each of you. You've got a choice here. It's like if you think about your journey to build out this capability and the benefits, and you can go either way. There's either if you're making a note to yourself and going back in time, sending a postcard to yourself 5 years ago, whenever you started building this capability. If you had to boil it down, what would you say? The most important thing you'd say. Or you can go, I'll go 5 years forward and I'll make a prediction about, a picture about the capability that I'll have. So you can go backwards and go, I'm going 5 years back in time to tell my younger self how I would do this. Or you can go forward and paint a picture of what we'll be doing in 5 years, and I'm sure we'll be working together in 5 years' time. We can come and check out if it was true, your forecast. So let's start with Carl. What would...
I think I would just I would send myself a postcard and just remind myself to continue to find that data advocate, ideally some of the distribution heads, different channel managers. We started to allude to some transformation and business architecture, but that trust factor comes into play when those leaders are telling and believing the data, using the data, and making sure that as they turn over, as they change roles or move other places in the industry, that the next advocate is found, and that continue to have that champion across every stage of the process here that we've described, and in every corner of the globe where the users are leveraging the data.
Thanks, Carl. There's 100 years of collective experience around this panel here doing these sorts of projects. So I think if that's what you boil down to your postcard, I would read that postcard. Terry?
I guess I agree about the data advocate piece. I think that's absolutely key. You've got to have buy-in top-down for these types of significant transformations. The other thing, and I said this earlier on, and I'll say it again, decide what you are and you aren't going to do, and decide that up front. Because if you don't, and you don't have that properly socialized in your organization, that can cause a huge amount of distraction and delay.
Thanks, Terry.
So I'll jump in the time machine then.
Yeah.
So I think it is going to get more complex. I think there's going to be more data, but I do think there are opportunities for some innovation. I think we'll see in the a Rosetta Stone for the in the client space, a little bit like Open Funds has done for and some of the regulatory change has driven for the fund space. So some kind of standardized format between to communicate between distributors and manufacturers, maybe.
Brilliant.
This domain is ripe for disruption, and I think that future comment that George is talking about is key, especially when thinking about just how tech has come around. But ultimately, the M&A activity and this is a domain that is going to rapidly change both complexity and disruption.
It sounds like Guns N' Roses classic. This domain is ripe for destruction and disruption. So we'll end on that note. Carl, Terry, George, thank you very much. Audience, thank you very much for coming.